What's going on with C3AI stock? The stock price jumped more than 100% to start the year, and then it's been fluctuating. Of course, the company's surrounded by all of this hype because of artificial intelligence and the rise of ChatGPT. So what I'm going to do in this video is I'm going to go through the company's latest earnings conference call and hear straight from management, straight from C3AI management, the CEO and the CFO, to get an idea what's going on with the stock, right? We want to go straight to the source. So that's what I'm going to do in this video. It's going to be insightful, so you're not going to want to miss it. Stay tuned and let's get right into it. So Thomas Seibel, the CEO, founder, and chairman of the board of C3AI, starts off this conference call that was held on March 2nd by saying, in July and August of 2022, we saw a significant negative change in the business environment with the lengthening of decision cycles, and I cautioned that the market downturn could be significant. Now, I will validate this statement because I follow a lot of companies in the tech space, in the business services, enterprise services space, and this was a common theme among many of the tech companies that I followed, was they were saying that they're taking longer to make sales. It's not that the sales were not getting completed or that they were experiencing a slowdown in sales. It was just that the deals were taking longer to close. And the cause for that, they said, was, before they were able to just deal with their contacts at the enterprise and make the sales. But now what happened with bigger tech companies was that they were requiring approval from the higher ups. So the sales rep couldn't just go to the contact and close the sale. They had to go to the contact, make the sales pitch, convince that contact, then that contact had to go higher up in the supply chain and get the approval to close that sale. And so that was elongating these sales cycles and making it longer to close. And that's what C3AI is mentioning here. They experienced the same thing in July and August. But what the CEO then says is, now, as we enter into our fourth quarter, we're seeing tailwinds from improved business optimism and increased interest in applying C3AI solutions to address an increasing range of applications across a broadening set of industries. This is a dramatic change from what we experienced in mid 2022. There's genuine optimism in the marketplace for our solutions. Now, for this second point, I will not validate this from what the CEO is saying, because from what I see, this company C3AI generates a significant amount of its sales from Baker Hughes. It's got nearly 50% of its revenue coming from this one company. So I wouldn't say that they're experiencing an increasing range of applications across a broadening set of industries. I think that's a bit of a stretch for what the CEO is trying to sell. Okay. Another thing they're saying here is, we validated our transition to a consumption-based pricing model. So yeah, they're switching over from a contract-based model to a consumption-based model, and that's making their services more digestible for companies in the space. They don't have to buy a big chunk up front. They can just pay for whatever services that they use. That's more friendly to their clients. It makes it easier to purchase, because you don't have to purchase, you don't have to commit to a big chunk. You can just pay for whatever you use. And here the CEO talks about the partnership with Baker Hughes. We substantially expanded our strategic partnership in the third quarter. The terms of this expansion resulted in an incremental C3AI booking of 32.5 million, and the frequency of payments from Baker Hughes was accelerated over the term of the agreement. This is good news because C3AI right now has a strong concentration risk associated with the investment, right? Because if you're invested in C3AI stock, you're exposed to this risk of the relationship with Baker Hughes. If something were to happen to this relationship and it was canceled, that's nearly half of its sales that's going to be cut off instantly. So that's a big risk. So to see the relationship deepening and a recommitment, that's good news. But ultimately, what I would like to see from C3AI is to increase sales to companies outside of Baker Hughes, and that way reduce the risk of being exposed to just one company, one client. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. Moving on, he says the recent explosion of innovation and availability of large language models and generative pre-trained transformers are also immediately compatible with the C3AI platform. The CEO is talking, of course, about ChatGPT, and it's already received a considerable amount of investment from retail investors because of this, right? Because ChatGPT was so popular, investors went looking for artificial intelligence stocks, and C3AI has AI right in their name, so they attracted a lot of investment. We believe the importance of the ongoing developments in generative AI is difficult to overestimate. It's difficult to overestimate, they're saying. We expect C3AI generative search capability to be incorporated in the C3AI platform and applications generally available to our customer base this spring. This spring. So it hasn't came out yet, and this is the product, the catalyst that could really boost sales for C3AI. It's currently being deployed as a core capability in the C3AI platform, and we're doing early deployments at Koch Industries and Baker Hughes. So they're testing it out right now at Koch Industries and Baker Hughes. So now they're talking about the CEO will talk about their guidance for the next quarter and saying, I will remind everybody on the call that this is the 8th consecutive quarter as a public company in which the third quarter is the 8th consecutive quarter in which we have exceeded our revenue guidance. Okay? Okay? So remember that. And then he goes on to issue the fourth quarter guidance of between 70 million and 72 million. So, what the CEO is trying to say here, if I'm reading between the lines, is remember, every quarter as a public company, this is our 8th consecutive quarter that we beat our guidance. But here's our guidance, 70 to 72 million. So in other words, saying our guidance is 70 to 72 million, but you can expect us to beat that guidance. Okay? So this is a conservative guidance is what he's saying. So we're telling you 71 million, but in all likelihood it's probably going to be higher. Okay? And usually CEOs will not go out of their way to tell investors that they beat guidance for several consecutive quarters, because if they are giving you a conservative guidance, they don't want to go out of their way to tell you that they're giving you a conservative guidance. But this CEO, he wants to go out of his way to tell you that he's giving you a conservative guidance. Why? I don't know why he's doing that. I could speculate in that he wants investors to be enthusiastic about the company's revenue growth and beat the revenue growth and make that be the primary focus, and for investors not to pay attention to the fact that um, this revenue would not be significant growth year over year. Or maybe he doesn't want you to pay attention to all the losses on the bottom line. I don't those That's just speculation, but again, that's what the CEO is doing here, and for me, it raises a red flag, and I cautioned when I'm looking at what a CEO wants me to pay attention to. I always get cautioned when a CEO tries to point me in a certain direction, because that means they're trying to take you away from looking at something else, right? They're trying to take you away from looking at something else, which always raises the red flag for me, and I'm always now more careful when I'm evaluating this company, because I'm trying to pay attention to all of these other things that I think it could be trying to put under the rug and hide. All right, so that's all I've got for this video. As always, I truly appreciate your viewership. And if you like this video, I'm going to link you to a couple of videos at the end of this one. And I'm also going to link you to a couple of playlists where I've made a bunch of videos like this one that you can go through and look at, and you can really get insights into a bunch of different companies. You can go through the playlist and look at all the companies there and just dig into researching the companies that you're particularly interested in. All right, thanks for watching. I'll see you over there.